On this episode, I sit down and talk with Evan Wabrick, a CPA here in Pennsylvania. We talk about some things like the common tax considerations that business owners overlook, what mistakes business owners make that end up costing them more in taxes, how remote work affects taxes, and how to make tax season less stressful for business owners. I hope you enjoy this episode.
Welcome to the Now and Beyond podcast, hosted by Ryan Canfield, founder and president of Victus Wealth Management. Whether you're seeking financial freedom, investment insights, or simply looking to optimize your lifestyle, tune in for conversations that empower you to achieve a balance between enjoying the present and ensuring a resilient financial future. Welcome to a podcast where the art of living well today intersects with the science of planning for a brighter tomorrow.
Hey, Evan, how's it going today?
Hey, Ryan. Good. Thanks for having me on the podcast. I'm really looking forward to it.
Yeah, no, absolutely. I'm really excited to have you. So let's start by telling the listeners who you are, what you do, and the client base that you typically work with.
So my name's Evan Wabrick. I am an associate member with SEK CPAs and Advisors. I am our firm's second youngest partner currently. I've been with the firm going back to 2012 when I actually started as an intern in my senior year of undergrad. I then did another internship whenever I was getting my MBA at Shippensburg. And I did a short stint at one of the big four accounting firms, actually in auditing. But then I was able to make a transition back to SEK shortly after that, and I've been back with the firm since. So I work in our firm's tax and accounting services department. So we handle doing tax-related services from compliance, planning, strategy. The accounting service side handles outsourced CFO, bookkeeping, payroll type functions for clients. My client base, I'm more so considered to be a generalist. So I have a wide variety of client base across a lot of different industries. I have clients that are in professional service firms, real estate, construction, manufacturing, wholesale, retail, software companies. The list goes on.
Yeah.
A lot of those clients are primarily structured as pass-through entities. So partnerships, S corporations, where the business return goes hand in hand with the shareholders or partners' individual return. I do have a few C corporations still, but that's less common nowadays. And some of those corporations are structured as those entities because of certain long-term goals that they have. They want to be set up that way. Aside from small to medium-sized business owners, we do have a lot of just other, I would say, more regular individual tax clients, where a lot of those clients that come to us for tax-related services have something else going on with their individual situation that is a little bit more complicated, I would say, than just a normal W-2 employee somewhere. So sometimes they'll have rental real estate. Maybe they're a sole proprietor. A lot of the retirees that we work with have various investment accounts. So they want a lot of comfortability working with a tax professional to help them with those needs.
Yeah. So let me ask, what's one of your favorite industries that you work with?
I like working with a lot of professional service firms. So that can be consultants, people with financial backgrounds. It could be doctors, lawyers, other people that provide certain services, because myself, I'm in a service-based business. I think easily relatable to talk to those owners and individuals about some of what's going on in their realm, because a lot of it's closely related and it's pretty relatable to them.
Yeah. Cool. So what what is it that you enjoy most about your job?
So I'm a planner by trade. So what I really enjoy doing, and it's kind of getting into the season right now where November and December timeframe of the year for me and others within my industry and the firm, this is more of our planning season now. So we're past our extension filing deadlines. I still have some stragglers that are still out there that are just technically late that we still need to get done. But primarily my schedule now through the end of the year is trying to touch base with as many as my client base that want to look at things prior to year end to, I think, one, give them more perspective going into the year end on what they're looking like from a bottom line perspective, how that's going to impact them on their returns, business and personal.
Mhm.
Once we kind of look at doing some planning and projections, is then trying to have those conversations about here's on that. What can we think about maybe trying to do? That's going to be one, maybe reinvesting back into the company, their employees themselves, whatever the case could be. Take advantage of that. And then also then possibly modify some withholdings or estimated payments that they're set up with so that they're going to cover themselves from one, a safe harbor perspective so that they're on track. They're not going to get penalized by any federal state governments for just paying it enough. But also then it's also giving us perspective that depending upon how the business is doing, where their estimates or withholdings were set up prior, maybe they don't need to make a fourth quarter estimate coming up, which for
Mhm.
some people that could be a lot of cash. So if you don't need to pay that to the government, then you're able to use that cash for your own means, do something else related to the business than rather than give them that extra money. So it's trying to get perspective on people with that. And then plus, I kind of also like to do that where as we then go into the filing season early next year, it's trying to see then how our projection analysis transpired to the actual data that we're going to file on the return. So it's kind of cool to see if the planning then also then co-aligns with the actual results. Now, the planning is, of course, estimates. That's what we're trying to do. But it is really cool to see how we can actually uh, kind of compare that to the actual results when we do the return.
Yeah. Yeah, I know tax planning is one of the most popular topics that, my millennial business owners come to me and they're like, "Hey, I want to pay less in taxes. I feel like, there's things that I should be doing to help mitigate taxes a little bit. It's just they can't keep up with the tax law changes that seem like they keep happening." So, what are some common tax considerations that, business owners tend to overlook?
Yeah, it's a great question. I think a lot of what I see where with some small to medium sized business clients that I work with, some of them don't have a certain personnel inside their business to help with the day-to-day accounting. And a lot of times, if that's the case, the accounting is put back on the back burner where the owners are focused on running the business, growing the business. And that's where their time is most valuable spent. Their time more valuable being doing those types of duties. And unfortunately, even though the accounting is very important, it gets put on the back burner. So
Mhm.
sometimes then it's tough where if they want to try to get a little bit more perspective on their own situation with the business and then how that's going to transpire and impact them personally, a lot of times it's doing a lot of catch up all at one time. Sometimes it could even get negated after the year end. And it's hard for us on our end then to advise people on what those numbers are meaning to them and to advise them on what they could particularly try to do before the year end to either reinvest back in the business themselves and then try to save some money depending upon what types of industries they're in. I mean, there's a lot of other considerations to factor into what types of options they could take advantage of to help save some tax. because it's very dependent upon a lot of their own personal factors as well.
Yeah. Yeah, and a lot of business owners, like you said, they're focused so much on the day-to-day stuff, trying to be in front of customers and clients, especially in that service industry that yeah, they end up putting the taxes like behind the scenes and they don't do anything with it. And then all of a sudden fourth quarter comes and they're struggling and they're like, "Oh my gosh, like tax season's coming up. Like I really need to start doing things." And there's things that they should have been doing throughout the year to either help stay organized or, paying their taxes to where, now they're playing catch up. For those companies that maybe it is just one person or one or two people and they don't have an accounting department, are there any tools that you could recommend that they should take advantage of to help make it a little bit easier?
Well, for one, they definitely, if they don't have it, they have to adopt some type of formalized accounting software to help them get organized for one.
Like
Uh,
QuickBooks?
QuickBooks is the most common for small and medium sized business owners. I know now Intuit is really pushing the online version where being less and less people doing the desktop version. They're putting it online. I think there's pros and cons to both of those versions. I am liking the online version a little bit more than what I've probably had in the past because more people are using it. And from our perspective is that if somebody has that function, they're able to add us as a third party into their file where we can get in when we put it on our realm and we're able to kind of see the live data right there. And if we need to maybe move some things around, we're able to do it right there and then, which makes that I think a lot more convenient. But I think if an owner running their business, if they want to try to do the accounting themselves, they got to make some time to do it. But then they also got to communicate that to us if we're the ones engaged to help them, particularly do the compliance aspect, but then look about doing some possible other services for them. But I think it's really imperative for any business owner to have a certain team of people asides from those in your organization to help you. So that being a CPA, such as myself, an attorney, things like that, where you got to have a team of people to help you. I actually had a conversation with somebody yesterday where they came on board towards the end of September last year and they got referred by somebody else. And we've been working them with going on about a year now, a little over a year. And he just said to me that he had wished he got our name 5 years sooner because of everything that we've had to do where we uncovered a lot of one, just miscompliance on different things. And because we've had to do a lot of catch up and get some things figured out for them, which we're actually at that point now, taking about a year to do it, but it just has cost them a lot more money, just from a fee perspective, but then it's just some unnecessary penalties that they've incurred because some things were missed and late. And it's just things like that where if people are taking the necessary steps to do things right the first time, work with somebody or a firm that has experience doing what they can do to help them, you're going to be more better off in the long run than if you're trying to maybe save a little bit of money by doing something maybe a little bit cheaper, whatever the case is. I'm a firm believer you pay for. So if you want to get, I think, a good product, a good service, I'm very, very service oriented. I pride myself with that with anybody that I work with that, if you want to work with me or, in our firm, that you need to get good service from us. And I try to have that attitude every day. And I think a lot of people are appreciative of that.
Yeah. Yeah, and something you mentioned about, like, making sure, you have the right team and paying for good service and good product and stuff. Like, I always go back to, when I first became an advisor and I'm like, "Oh, I'm in finance, like, I can figure out this whole tax side of things," and, I think in my first year, I don't think I withheld enough taxes or any taxes at all, year two, I think I did and still underestimated and got hit with a large tax bill. And then I think it was finally in my third year where I told my wife, I said, I'm not doing this anymore. Like, I got to find a CPA. And that's how you and I met. And from that time forward, like, I only have to spend a certain amount of time a year really thinking about my taxes because you and your team is handling everything else. And, I was still old school up until what was it this year? Using Excel spreadsheets to track every single expense and, trying to create a balance sheet and profit and loss statement using Excel. And I finally made the jump to QuickBooks Online. And, it's been a game changer, and it's made my life easier, and I think it's gonna end up making your life a little bit easier because you can see everything live. We're able to make adjustments as needed. I'm sure you and I will probably get together here 4th quarter to see is there anything else that we need to do? But it's super important surrounding yourself with that team, to make you or help you do what you do best. Like, it does a disservice to my clients if I'm so focused on my taxes and I'm sitting here trying to work on them and stuff, where I do my best work having a conversation with the client. That's what I want to focus on, not
Yep.
taxes.
Right.
So,
And that's just in that perspective right there, I think hits it right on the money where for business owners that are out there listening to this, like your time is more valuable doing what you do best with running your business, serving your customer base, where you have to have people inside your organization or externally from that to handle certain functions for you that you just don't have the experience with nor the time. And yeah, I mean, that costs money. You have to consider that, but you got to factor that, that time value of money. Where's your money best spent and best use of your time being allocated? And people just got to consider that as they think about how they're doing everything when it comes to running their business.
yeah. So, Evan, let me ask you this. So, what are some common mistakes that you see, with small business owners that end up costing them more in taxes?
I think one of the first things that comes to mind is that they do something, whether it's uh, I don't know, it could be a sale, it could be a purchase of something, whatever the case is, but they do something that's a large transaction. They don't communicate that around the time that it's going to be done or even prior to it. And then they do something and then they tell us they did it. And then it's too late for us to even, you know, ask about, well, why are you going to do this? What are the tax ramifications of that? I think a lot of people jump into things where, you know, it could be particularly like a sale of something. And maybe they're not thinking about what some of the tax consequences are related to that until it's too late. And then after a lot of times with that, there's one of our partners has something on his wall that says, I'm an accountant, not a magician. We just can't make something go away as much as we
Yeah.
would like to wave a magic wand with that. But that's where it's just like, it's trying to have that communication with people about, hey, I'm thinking about doing this, thinking about doing that. What's your advice? Would you do this? What's my impact? All that stuff. That's like one of the biggest things.
And
Um,
like, give me an example of, like, some things that they do where you're like, "Hey, I wish you would've considered contacting me first." Is that something like maybe buying a new vehicle for the business?
it, it could be that. I think a lot of times is maybe selling something. Like I'll give you an
Okay.
example. One guy this past filing season, he has a lot of real estate and he sold a property and there was a huge gain on this. Okay. What happened with this guy was when he bought the property and when he sold it, he actually did not hit a full year of owning the income producing property. Okay.
Mm.
If he had waited, I don't know, a month and a half, he could have then had a short term gain fall into a long term gain. And that is huge
Oof.
difference in the tax
Yeah, it
related
is.
to that income that he experienced on the gain. And he had a huge gain on that. So when we were working up the partnership return and his partner had a lot of good questions related to it, but I'm having to walk them through the whole return about what some of these numbers mean on their K1s. And I'm trying to explain to them about the sale and how that particular sale is shown on the K1. And the numbers that are shown on that have very different tax implications to them that they're going to have to handle on their personal returns.
Yeah.
But just trying to communicate about like the timing of some of that. I mean, this is going to add up to thousands and thousands of dollars of tax difference because of maybe just waiting a little bit longer.
Yeah.
But at the same time, in their perspective, if they have an opportunity to make a good deal where they're able to get more of a higher purchase price per se for that building at that point in time, then you got to weigh that option about what cash can I get for that and worry about the tax consequences later. I mean, that's one thing that you have to consider, but it's just talking about some of that before you actually do something.
Yeah.
And
That's one
another
of the
another example of that comes into play with like another real estate person is, this guy, if he wanted to, he's buying other properties. Well,
Mhm.
do some 1031 exchanges where you're able to do that, not have tax implications to keep buying some of these properties now. That's a big deferred tax, consideration you can take advantage of now. And now Pennsylvania has adopted and conformed into the federal rules regarding that, where they didn't before. So
Yeah.
that's a big taxpayer win that people should not try to overlook if they can do that.
Well, and a lot of people probably have no idea what even a 1031 exchange is.
Some don't. I mean, a lot of people that are in that industry of being real estate professionals that I have a few of, a lot of them are doing that, which is great. But yeah, I mean, not everybody might who owns a property might not know that. But that's
Yeah.
where trying to talk about that stuff prior to your team can try to give perspective on what some of your options are and what could be the best thing for you to take advantage of.
Yeah. And that's what I try to talk to all my clients. I'm like, listen, before you do anything that involves finances, whether it's buying a car, buying a home, financing, a large purchase like a washer and dryer, talk to me first because we can discuss, like, does it make more sense to pull more money out of maybe a savings account or another account to kind of put down towards it, or do we pay cash for it? Do we finance the whole thing? Is there better rates out there? And like, how's this going to impact everything? I know one of my most recent YouTube videos, I talked about the number one thing that I see is people buying too big of a house. And I go back to when my wife and I first graduated college, we were approved for an enormous mortgage. And it's like, if we wouldn't have known any better, we would have just been like, yeah, let's do this. Let's purchase this house. And we probably couldn't have afforded furniture for it or anything like that. And I've had clients do the same exact thing. And then all of a sudden I go to meet with them and they're like, we can't afford the mortgage anymore. We put all the furniture on a credit card that now is snowballed and we can't do anything with it. We need help.
Prior,
Like, how do we
probably
get out of
a lot higher interest rate on that card then too to
Oh,
finance that.
like 20, 25, 30%, where it's like, if you would have consulted with me or you or like your team, we could have given you some advice on how maybe to better navigate it. But again, it's just trying to get people to understand, like, you can rely on us for that help. That's what we do.
Yeah. And, going to like what are some maybe things that some other tax players or clients are missing right now, more from an individual perspective here, is I've seen it over the past few years more than ever throughout my career where a lot of times people are not keeping up and checking their withholding if they're a W-2 employee. The W-4s that the IRS the W-4s that the IRS has put out there has drastically changed in the way the withholding is calculated now. And they've made the form a lot more complex than what it has been in the past. A lot of times it was just, here's your filing status, here's my number of exemptions, here I'm good to go. Well, it's not like that anymore. There is a lot of other considerations that people have to factor into their situation when they're filling that out to then calculate a more accurate withholding. You have to look at it, especially if both spouses work. If you file a married return, you have to consider both factors with that and possibly some other income sources that aren't covered by withholding to get to a better picture. Or else, if you don't fill that out right, I've seen a lot of people just have a lot of higher tax balances due with the return because they have a bad withholding problem. And it's trying to get people, I think, a lot of perspective. Like, you got to be checking some of this stuff. And that's where some of the planning comes into play with that. I mean, with a lot of the planning, since a lot of the small to medium sized business owner returns that we do, the business return goes hand in hand with the personal. I mean, we are checking a lot of that stuff when we're doing some of that. But for somebody that doesn't have another business return to file, where they're just looking at their own individual, that's a big item that's missed, where I've seen it especially the last 3 years more than ever.
Hmm. Yeah, I know, like outside of business owners, just everyday clients that are paid W-2. A lot of times I ask them like, "Hey, when's the last time that you reviewed, you know, your taxes that are being withheld, your deductions, everything like that?" And we're like, "Oh, well, we signed the paper when we were hired and we never went back to go look at it." And
Yep.
now they have multiple kids and all this other stuff, and it's like, we gotta make some adjustments. And, a lot of times they're like, "Yeah, we owe money every single year." It's like, "Well, yeah, because you haven't sat down and actually reviewed, your like, you haven't done tax planning."
Yeah, and a lot of times when those people are filling out those related forms, their HRs can't help them because
Yeah.
they're trying to say, well, we can't give tax advice, so they can't give them guidance on how to fill that out. So it's up to them to try to either do it themselves or try to consult somebody else to help assist with that.
Yeah. Well, and that goes kinda going shifting gears back to business owners. I have talked to people that have chose the completely wrong entity when
Yep.
they're sitting there forming their businesses and stuff. Do you have any tips around that, like, what they should consider when it comes to choosing the right entity?
Yeah. I think entity selection is, I think, one of the most important things, especially when you're thinking about starting a business, because you got to evaluate what's your goals going to be with this. Is it where this is my livelihood? This is what I'm going to do to earn my living. That's all. That's obviously a very important goal. Is another goal where I want to save as much tax as possible. Do I then want to grow this business up to a certain point where I want to try to sell it? A lot of those factors and considerations are key to figuring out which type of entity selection to consider. And, there's pros and cons with any type of entity type out there. But I think it's trying to weigh a lot of those factors and then talk to somebody who has some experience with that to then come up with what the best option would be for you. I have a lot of people where if it's just themselves, most common entity structure in the US is a single member LLC. So right off the back, if you have one owner in that, you're a sole proprietor for tax purposes. You're called a disregarded entity. You don't file a separate business information return. It's filed on Schedule C on your personal return. From there, if you add a partner or you elect to be taxed a different way, then you have different filing types moving forward from there, either a partnership, an S corporation. And if you have other people involved with that, then your business filing requirements are a little bit more complicated with more owners than just yourself.
Yeah.
But it's trying to figure out and weigh those options, because what your goals are, entity selection is a huge part of that.
Yeah. Well, so and especially right now where remote work is very popular, people are working from home, they're working with clients all across the country. Can you shed some light on how home office or remote work deductions work for these business owners?
So to claim a home office deduction, the most common way for people to take advantage of that people that I work with are those that are self-employed. Okay. A lot of times, so employees cannot get a home office deduction. I've seen over the years where there have been employers that have some type of, you know, reimbursement structure with an employee that maybe they're just working remotely out of their house
Mm.
to help
That's
with that
yeah,
employee to
interesting.
accommodate with some of those costs that are affiliated that they're paying personally, like internet, electricity, things like that, office supplies, stuff like that. I've seen that come up over the years. That's one way for companies to give some employees who are working in that type of environment some type of benefit for doing that to help with some of those costs. But other than
Which
that,
I
employees
think that's pretty important to do, like, because I think about, like, when my wife started working from home, we sat there and we were like, "Okay," we had to go purchase a desk. We had to
Yep,
purchase, you know, pretty much build an office, in our home for her to be able to work from here, and it was like, she was kind of mandated to work remotely, the opportunity to work in an office went away, so it kind of fell into our laps that we were responsible for paying for all of these expenses, needed a
a
printer.
lot yeah. A lot of times, a lot of employers will help with a lot of those costs. Now, if somebody doesn't get reimbursed for those costs and they're a W-2 employee, they're not able to get a federal benefit anymore because when tax reform went through back at the end of 17, miscellaneous itemized deductions, which unreimbursed employee business expenses were a part of, went away. So it's not able to get that on the federal level. Being in Pennsylvania, employees can claim unreimbursed expenses on their state and local returns. Have seen over the years where if people are reporting that on their returns, a lot of times there's some notices that are followed up with that asking about more verification for some of those costs, which could then also be required where the employee has to go back to their employer and have some type of verification letter submitted that they can respond to that notice of like, hey, these costs weren't reimbursed. They're able to claim them. But a lot of times, a lot of businesses are claiming them as a reimbursement to that employee because those businesses want to get that deduction for those type of costs. But with the going back to the remote environment, ever since COVID, a lot of businesses have been more inclined and more open to having people work remotely all over the place.
Mhm.
So from a compliance perspective, that has complicated things a lot more just from primarily compliance reporting requirement. And so what I'm going to get into here is where I am our lead in our firm's SALT practice, so that's state and local tax. So what my committee here at the firm does is we help out clients, some of our colleagues in a lot of our other offices with various state related questions related to either income tax and or sales tax. Remote work comes up a lot because if you got a remote employee and they're in another state, well, if they're just doing like normal administrative type duties and they're not just soliciting sales by traveling different places, that business has potentially created nexus in another state, which means a filing requirement then is necessary.
Mm.
And potentially there's some tax obligations with that, depending upon what your activity looks like. With also looking at that, if you have physical presence in another state, depending upon what you're doing, there could be sales tax implications related to if you're whatever product or service you're doing. And even if the business does not have a necessary physical presence in another state because of remote employee, for example, because so much business is now being done, e-commerce wise now via
Yep.
selling products to people all over the place or people providing services to people that are located in all these other different states. One thing that a lot of businesses overlooked is they could have a lot more tax exposure from a state perspective because of this. A lot of states have different rules on how you need to source particularly different revenues depending upon your industry type, whether it's service based or you're selling a tangible product. That makes that a lot more complicated that a lot of people just don't really know what those rules are. And since they don't know, a lot of times it goes under the radar.
Yeah.
What I've seen happen sometimes over the years as well is that, if we're looking at different things and we think that somebody has another state income tax exposure, for example, well, if no return has never been filed for that state, a statute of limitations has never started. So what I've seen sometimes is if that happens and somebody would get audited, for example, a state could go in and look at your records going back to X number of years, and they could go back and assess unpaid tax liabilities going back to when they first think you established nexus in their state. And that could be huge for some people. And that's
Yeah.
income tax and sales tax related there too.
Okay. Well, so Evan, as we get ready to wrap up this episode, I would like to ask you, with tax season getting ready to jump full swing, fourth quarter's coming, what's one practical tip that you have for business owners that can help make this upcoming tax season or any tax season moving forward easier for themselves?
Yeah, I think a lot of it just comes down to being organized. Make sure that you have your records up to date, stuff is reconciled, you got related support documents ready to go that you can give to your provider to help prepare the return. Anything that could be done more from an organizational standpoint makes the process more efficient on both sides to get everything done, and I think in a timely manner. A lot of times this stuff just gets held up that we've seen, which the process just gets dragged out is because we're just not getting information we need in order to prepare the returns. We're missing something. Sometimes that could be out of the client's control, whether they're waiting on a certain statement or whatnot that they got to get from somebody else that we need. So that stuff could get dragged out because of that. But if that's not the case, if they want to get things done timely, then they got to be more organized.
Yeah.
A lot of times that could be even if they want to have their providers send them a summary of items needed or some type of checklist or whatever it could be of here's what we had last year. We need at least this information to get started and kind of follow up from there. But organization's key.
Cool. I appreciate that. Well, Evan, this has been fantastic. Like I mentioned earlier, tax law changes happen, especially election years, stuff like that. We could see a lot of changes coming up over the next year. I would love to have you on anytime something like that happens, be able to break it down and, make it a little bit easier to understand. So that way business owners don't have to spend time, researching it for themselves.
Yeah. And now that the election has passed us, the tax legislation at the federal level is set to expire at the end of 2025. So we got to see what's going to happen now, but not going to be a surprise. And we are going to be expecting some tax law changes coming up here in the near future.
Yeah. Cool. Well, I appreciate you, Evan. Thank you for coming on.
Thanks, Ryan. Yep. Appreciate it.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Securities and advisory services offered through LPL Financial, a registered investment advisor. Member FINRA SIPC.